Dear client and partners, I'm Christophe Mallet, Head of International Development at OFI Asset Management. I'm happy to inform you that OFI AM will invite you to its summer market review. You will have the possibility to listen to our experts from your holiday destination. Today, Bertrand, Deputy CIO and Head of Fixed Income Balance and Quantitative Portfolios at OFI Asset Management, will share with you his views on the financial market evolution.
Hi everyone, thank you for this fifth podcast of the Market Summer Review. We do not have a large amount of news for the last week. Two things to keep in mind. First, the PMI that were a little bit surprising in the Eurozone, a little bit disappointing, just above 50, which is the expansion level for the PMI, and a little bit below the consensus that expected 52 to 53. And it's interesting because in the European economy, we were surprised, as Mrs. Lagarde said, by the recovery just after the COVID-19 first wave. But now I think the consumer is waiting for the second wave, and it will surely lead for some new plans on fiscal approach by governments at a national level or a European level. On the other side of the sea, in the US, those PMI were a little bit above the consensus. Meaning that the US recovery is accelerating a little bit. It's not really surprising due to the large amount of the planned of the budget increase made by the US government, and by the fact that the US has a 2 months lag compared to the first wave of the crisis in Eurozone. Second point important last week was the minutes of the European Central Bank and the Federal Reserve, showing two important points. On the US side, if the inflation targeting, meaning an average of inflation on 10 years, is globally accepted by the committee members, the second phase of the plan, which leads to yield curve control, is clearly not a consensus. So I think it will take some time to implement that kind of monetary policy for the US curve. What does it mean? We think that the US 10 years should stay low for long, between the 0.5 and the 0.75. But we have to monitor closely the US activity, and we think that the Federal Reserve don't want to be trapped into too tiny monetary policy explanations. For the European Central Bank, the point was made mainly on the percentage of government debt that the European Central Bank buy in the market, clearly deviating in the speech of Mrs. Lagarde from the capital key of the European Central Bank, but the members of the committee were clearly there was not a global consensus to that kind of deviation, and we have to follow that point in the coming weeks because it may put some pressure on mainly the Italian spread curve. Our view is that the German 10 years should stay low for long, as for the US, between minus 0.3 and minus 0.5. We think that carry asset classes should continue to stay interesting. We say that for more than 3 months now. It's less interesting than before, clearly, but we think that investment grade, for example, is still interesting. You can reach between 0.3 and 1.3% return per year, depending on the maturity and the rating you choose. So positive return is interesting in that kind of low rates for a long time. Nevertheless, we should experiment some downgrade for some insurers in the coming weeks. For example, last week we have Accor and Valeo that were downgraded from BBB minus to BB plus, going into the BB plus, the high yield category. Sorry. We think due to the size of those companies, it's not really a big issue, except on the regulation aspect. We think that it's expensive, clearly, more than, but it should continue to stay expensive. If we go further in the risk appetite, in the high yield market, we have clearly a beautiful performance since March, but we think there is still some value in the high yield between, depending on the category you choose and the sector, between 3 and 5%. But we prefer a double B sector that may be downgraded to single B, but will stay alive, instead of the single B sector that may experiment some default in the sectors particularly impacted by the COVID-19. Going further, we go to the emerging markets. We think there is still some value in the emerging debt, between 4.5% and a little bit more than 5%, depending on the sector and the country you choose. This market suffer from clearly the COVID-19 impact on some emerging economies, like in Brazil, for instance. But as the euro-dollar is going to stabilize in the coming months, due to the equilibrium that is appearing between US and European economy, we think there is some value at that level. Carry will be clearly a lead in the coming quarters due to this very low interest rates universe. For the more risky asset equities, we think that we are stuck between two opposite sides. On the positive side, we have fiscal plan. We have central banks that are buying a large amount of debt, keeping rates at a very low level for a very long period of time, and doing roughly whatever it takes to support the economy. On the other side, when we look upside, we have some new worries about the second wave of the COVID-19 impact. We have the US elections in the coming months, and as Mr. Trump is very low in the polls, we should experiment some volatility, as we know now the behavior of the US president. And last but not least, the Brexit negotiations are not going very well, and we think we may having some new volatility on the European market due to the difficulties to find solutions. So for the moment, we are neutral on the equity market. A buy and dip is an interesting technique, and we think we do not have to expect too much increase in the coming weeks. Just to finish, as we talk about that for more than 3 to 4 months, we think gold is still interesting in a global asset allocation. We have negative real rates, we have a hedge against the inflation, but in a global portfolio, we think this diversification and decorrelated asset class is interesting, and should be one of the very few asset class that will have interesting returns in case of a new crisis coming from the COVID-19 or even geopolitical problems. So having some gold in a global asset allocation portfolio is still interesting for us, even at that level. Thank you for hearing me, and I wish you a very pleasant week. Bye-bye.